Well, good afternoon, ladies and gentlemen. My name is Rob Millner and I'm Chairman of Brickworks Limited. I would like to welcome all shareholders and visitors to the 85th Annual General Meeting of Brickworks. If you have not yet been issued with a voting, non-voting or visitor's registration card, could you please see a representative Computershare at the registration desk. Today's meeting is convened in accordance with both the Corporations Act and the ASX listing rules. The Company Secretary has advised that there is a quorum, so I declare the meeting open. There's a few standing orders I'll just run through before we get going. Questions will only be taken from shareholders and proxies or attorneys of shareholders. Only those who are registered with an electronic handheld device or those holding an orange card will be entitled to ask questions at today's meeting. Shareholders wishing to ask questions are requested to raise your orange card or show your electronic device, and an attendant will pass you the microphone. Please state your name before asking a question. Would you please ensure all mobile phones are turned off? Before we go any further, I would just like to introduce you to those sitting up on my right here. Miss Susan Lepinos, General Counsel and Company Secretary. And next to her is Lindsay Partridge, our Managing Director. Next to him is Michael Millner, Robert Webster, Debbie Page, Brendan Crotty, our new Director Malcolm Bundy, and on his right is our Chief Financial Officer Robert Bakewell. And here today in attendance I'd like to welcome Ms Robin Stubbs. As we have announced, Robin will commence as a new Director on the 1st of January. We also have with us a representative of our external auditors, Mr Mark Conroy from EY. Now we're going to give you a different presentation today, something we haven't done before. This company's come a long way in the last 20 years. I don't think a lot of people quite realise what we've done. So we're going to give you a very detailed rundown of what we've done, and Lindsay's got a lot in his pipeline and he'll run through, which I think the next 20 years could even be more exciting than the last 20. So once we've given you our presentations, we'll then open the floor up for questions. Is someone going to work that, or do you want me to do it? Right, Mark, thank you. Brickworks has a diversified portfolio that has provided stability of earnings and steady asset growth over the long term. The company has significant assets in investments, property, building products, Australia, and in the last 12 months we have made investments in North America. In doing so, we have created the fourth significant division within our group. Brickworks was listed on the ASX in 1962, and in 1969 made a significant investment in WH Soul Pattinson, which remains in place today. The company is stable and conservative, with a low gearing level, a prudent approach to capital management, and a stable board and management team. We have a proud track record of dividend growth that dates back over 40 years, and we believe our portfolio of businesses is well placed to continue to deliver long-term earnings growth in the years ahead. Now, there's a bit of information on that slide up there. I just hope you can read it, as some of it's in quite small writing. As we approach 2020, it's appropriate to look back at the evolution of Brickworks over 20 years, and also look forward to where the company is headed in the future. Back in 2000, Brickworks has had 5 brick plants. I think today we've got 50, Lindsay, haven't we? Operating across 2 states, which were New South Wales and Queensland, in addition to its stake in WHSP. The total revenue then was 160 million, with asset backing of around 500 million. Since then, Brickworks has grown significantly through active portfolio management, and major transactions have included the acquisition of Bristol in 2003, providing geographic expansion to other major states in Australia in bricks and new roofing business, significant acquisitions in masonry and precast, and a major investment in cement. The establishment and development of the JV Property Trust, major property sales such as Brookvale, Eastwood, Scoresby, Oakdale and Punchbowl. Entry into North America through acquisitions over the past 12 months, and at the same time M&A across WHSP and its group companies have added significant value to your company, Brickworks. Today, the company is backed at asset value of 3.3 billion, so you can see it's grown from 500 million. And in the current financial year, we expect to generate around 1 billion in revenue. Company assets now include Australia's leading brickmaker with operations in all major states, leading positions in a range of other building products in Australia, the largest brickmaker in the northeastern region of the United States, a 50% share in an industrial property trust with a net value to Brickworks of more than 600 million, and a 39.4% stake in WHSP worth around 2.1 billion. Looking ahead, we believe the company is well positioned for further growth. In particular, we will invest to meet the growing demand for prime industrial property, and will continue to support our North American businesses as it pursues growth and opportunities. In addition, we have exciting new plant investments underway or planned in our Australian building products operations, and Lindsay will touch on those. As you can see, we have achieved a lot in the past 20 years, and we are excited by the opportunities available for continued growth well into the future. Financial year 2009 was a very successful one for your company. The company delivered a record full-year EBITDA for continuing operations of 346 million, up 12% on the prior period. Underlying net profit after tax from continuing operations was also at a new record. This translates to underlying earnings per share of 156 cents. After including the impact of significant items and discontinued operations, the net profit after tax was 155 million. Total shareholders' equity was up by 96 million and now stands at 2.2 billion. Net tangible assets per share were up 7% to $13.28. A fully franked final dividend of 38 cents per share is payable to shareholders tomorrow. This takes the full year dividend to 57 cents per share, up 6%. Based on our current share price, this represents a grossed up dividend yield of around 4.5%, including the benefit of franking credits. The chart on the screen shows our dividend history going back over 40 years. We recognise the importance of dividends to our shareholders, and we are proud of our strong and stable dividend history. Brickworks is only one of 8 companies to maintain or increase dividends every year since the turn of the century. In fact, since listing on the ASX in 1962, we've only reduced our dividend once, and that was in 1975. In addition to dividend growth, Brickworks has also a strong history in total value creation. Over the past 50 years, the company has delivered shareholders' returns of over 12% per annum, incorporating dividends and share price appreciation. This means that $1,000 invested in Brickworks in 1968 would today be worth around $463,000. As I mentioned earlier, the inferred net tangible asset backing of the group is now more than 3.3 billion. The value includes the net tangible assets held within the building products business, the property trust, plus the market value of Brickworks' stake in WHSP, offset by net debt. The growth in inferred asset value is shown in the blue line on the chart. It has doubled over the past decade, and as I mentioned earlier, has increased from around 500 million over that 20-year period. Our history of value creation is underpinned by the company's diversification strategy. This diversity provides earning stability and the ability to invest for the long term through various cycles. Brickworks' look-through asset exposure is shown on the left-hand side chart, including the breakdown of assets held by WHSP. So in addition to building products and property, this shows that the company has exposure to other industries such as telcos, energy, finance and also health. Our North American brick operations are now of significant size and scale to make a meaningful contribution to group earnings, whilst also providing diversification and strong prospects for growth. And Lindsay will talk more about that business later. And also we're welcomed in America by government. Lindsay and I were over there in June and we had a meeting with the Pennsylvania government. This is a Monday night at 6 o'clock. Imagine Australian public servants coming out at 6 o'clock on a Monday night. And they were telling us, what can we do for your company? How can we help you? I said, sir, I've never had anything like this ever in Australia. I said, the only thing I get in Australia is headbutted by people telling me I can't do this or when I can do it. So we're really looking forward to this exciting business we've bought in America, and as I said, Lindsay will touch more on that as we go through. At Brickworks, we recognise the importance of sustainability, and this year's sustainability has been formally incorporated into the Charter of the Audit and Risk Committee. In 2019, we launched our Sustainable Business Framework, incorporating our community, the environment, our people and responsible business practices. These issues are covered in depth in our first standalone sustainability report that we released in conjunction with our full year results. Brickworks' purpose has sustainability at our core, to create beautiful products that last forever, and we are proud that our products support energy efficient and sustainable housing. For example, bricks are made from non-toxic ingredients, non-inflammable, low maintenance, weatherproof, reusable, recyclable, inert, and have excellent acoustic properties, and sold with 100-year guarantee. The continued strong performance of the company is a credit to our staff. On behalf of the board, I would like to thank Lindsay, to you and all your staff, for what a fantastic effort you've done over the past period. I would also like to thank my fellow directors, in particular Debbie Page. Debbie's been the chair of our DD and those American operations, and she's also participated in the interviews for our two new directors. And also I'd like to thank Rob Webster and Brendan Crotty for assisting in those roles. And also to our shareholders for your continued support. As I mentioned earlier, we have recently announced the appointment of two new independent non-executive directors. I again welcome Malcolm Bundy, who commenced as a director on the 1st of October. Malcolm has a valuable experience as a managing director with expertise in complex manufacturing operations in Australia and also the USA, strategy, mergers and acquisitions, and business portfolio management. His broad business knowledge, manufacturing experience in Australia and the US, and a strong financial background will complement the board's existing mix of skills and experience. Malcolm will serve as a member of the board's Audit and Risk Committee, Independent Board Committee, and Remuneration and Nom Committees. As I mentioned, we're also pleased to welcome Robin Stubbs, who is with us today in the audience and who will commence as a director on the 1st of January. Robin's executive career spans 25 years in senior roles in sales and marketing, including two of Australia's largest property groups, Stockland and Lendlease. Robin will serve as a member of the board's Independent Committee and the Rem Committee. The two new appointments will increase the number of independent non-executive directors to 5 and the total number of directors to 8, and will facilitate a small transition in the period until the retirement of Brendan at next year's AGM. I'll now hand over to Lindsay for his presentation.
Thank you, Chairman, and good afternoon, ladies and gentlemen. It gives me great pleasure to report that Brickworks has delivered another strong financial result in the year 2019. We've also made significant progress in the implementation of a range of strategic initiatives to position the company for further growth. But first, and most importantly, I would like to talk to you about safety. The health and safety of our people is our number one priority, and the company has made steady progress in reducing the number of workplace injuries over many years. As shown, the number of lost time injuries sustained within our Australian operations has progressively decreased over the past 5 years. There were 5 lost time injuries during 2019. This translated into a lost time injury frequency rate of 1.7 injuries per million hours worked, in line with the prior year. In our newly acquired operations in the United States, there were 6 lost time injuries for the period since the acquisition of Glengarry, and I think they're a little bit personally interrupted with their normal progress of operations because of the acquisition, and because that was higher than what it had been previously. We're committed to rolling out best practice safety standards across all our operations, and this will include special focus on those operations in North America where workplace injuries this year were higher than they had been previously and higher than in Australia. As the Chairman mentioned, Brickworks has a diversified portfolio of businesses. Investments consist primarily of a 39.4% interest in Washington H. Soul Pattinson. which is an ASX 100 company with a current market capitalisation around $5.3 billion. Building Products Australia consists of leading brands such as Austral Bricks, Bristol Roofing, Austral Masonry and Austral Precast. We have established a new building products business in North America with 3 acquisitions in the last 12 months. Now, this has quickly established ourselves as the leading brick maker in the Northeast, Midwest and Mid-Atlantic regions of the United States. The property business has grown significantly over the past decade through developing surplus land within the building products business and includes a 50% share in a $1.8 billion industrial property trust with the Goodman Group. As outlined, each of these businesses has a strong position in its own right with significant asset value and good prospects for growth. I will now discuss each of them in more detail, starting with our investments in Washington H. Soul Pattinson, the largest part of the group by asset value. Underlying earnings before interest and tax from investments was $104 million in 2019. It was down by 16%. The decline was due primarily to a decrease in contributions from Round Oak Minerals. $56 million in fully franked dividends were received during the year, in line with the prior year. As shown on the chart, our investment has provided a steadily increasing cash flow stream via dividends. And this is of critical strategic importance, allowing the company to make long-term investment decisions in spite of cyclical downturns that we experience in building products. It also underpins Brickworks' dividends to you, our shareholders. Brickworks' share of Washington H. Soul Pattinson has a market value of just over $2.1 billion at the end of the financial year. Although the share price was up compared to the prior year, the market value of Brickworks' shareholding decreased by $89 million. This was due to the sale of shares in November and December last year, reducing Brickworks' shareholding to 39.4% from 42.7%. The sale delivered $208 million in cash proceeds before tax. Our investment has delivered outstanding returns over the long term, with an annualised total return of 11.6% per annum for the past 15 years. This represents an outperformance of 2.6% per annum versus the ASX All Ordinaries Accumulation Index. The company has a track record of disciplined, opportunistic investment combined with capital allocation that has added significant value over a long period of time. The slide on the screen shows a selection of acquisitions and divestments across the group and their group companies over the past decade. One recent example is the sale of the Pitt Street head office building, which the company had occupied for 145 years. The sale demonstrates the pragmatism of the board and the willingness to sell an asset at the right price. And that sale achieved a record per square metre rate for Pitt Street Mall. Looking more closely at Washington H. Soul Pattinson's key holdings, it has $1.64 billion invested in a 25.3% stake in TPG Telecom. This business is a low-cost and high-value service provider with a utility-like subscription customer base. It has announced a merger of equals with Vodafone that has the ability to deliver significant cost reduction synergies, albeit this remains subject to regulatory approval. It also has over $1 billion invested in the New Hope Group. Through a 50% holding, New Hope is a low-cost coal producer, meeting the increasing demand for clean Australian coal from customers in Asia. In addition to these 2 major investments, it has a $353 million invested across a diversified financial services portfolio and $265 million invested in healthcare and pharmaceuticals. Washington H. Soul Pattinson is a stable and trusted business partner to Brickworks, and we are confident that we will continue to add value and deliver a growing stream of earnings and dividends over the long term. Turning now to property. Property delivered a record earnings before interest and tax of $158 million in the financial year 2019. This was up significantly on the prior year. This represents the 6th consecutive year of earnings growth. The improved result was due to significant higher earnings from property trust, including a revaluation of profit of $70 million. This was driven by continued industry-wide capitalisation rate compression for prime industrial property assets. The total value of assets held within the property trust was almost $1.8 billion at the end of the year. Borrowings of $490 million are held within the property trust, giving a total net asset value of $1.3 billion. Brickworks' 50% share of net asset value was $633 million at the end of the year. After a decade of methodical investment and development within the property trust, we are very pleased with the progress that has been achieved since its inception in 2008. Consistent development activity has resulted in the trust now having a gross lettable area of leased assets of 644,000 square metres. In the same period, Brickworks' net asset value has increased at 18% per annum, generating significant value for shareholders. We are focused on continuing to build asset value in the property trust. Since the end of the financial year, development activity continues to be strong, with the completion of 2 further developments anticipated in the first half. This will drive further growth in asset value and rental income, with each of these properties tenanted on long-term leases. In addition to the completion of new developments, the sale of 10 hectares of surplus land into the trust at Oakdale East will underpin the property results in financial year 2020. This land is part of the 88-hectare Plant 3 site that has been identified for development for a mixed-use industrial site, to include a new masonry plant replacing our existing masonry plant at Prospect. In September, we announced that the Trust has secured development approval for 89 hectares of land at Oakdale West. This site, shown on the right-hand side of the screen, provides the opportunity for further growth over the next 5 to 10 years. The strong demand for our industrial land reflects a wider structural change across the economy as companies modernise their supply chains in response to consumer preferences such as online shopping. Well-located industrial facilities close to consumers are increasing in value as they are now a critical component in the supply chain solution of the new economy. In addition, technological advances are rapidly changing the look of modern warehouse facilities. These advances are improving efficiency and allowing industrial land to be utilised more effectively. Some of these trends are full automation, including robots, like the one on the screen there, that enables efficient picking and packing. And the warehouses are becoming, we've traditionally looked at warehouses, they're all sort of, they're called cross-stocking and single level. Today they're very high, up to 10 stories high. So they could be inside, they could be multi-level, with a series of mezzanine levels, or they could be high bay warehousing with automated stocking and destocking there. These trends are driving the increased valuations, and we expect this to continue. With a tight supply of large industrial zone land in prime areas, such as those held by Brickworks and the Property Trust. With Goodman, we have a JV partner who is a world leader in multi-storey logistics, with scale and operational capacity to deliver in response to the strong demand from blue chip tenants. Turning now to Building Products Australia. Revenue from continuing operations for the period was $755 million, and the EBITDA was $88 million, down by 18%. Despite the lower earnings, operational performance across most divisions was encouraging, given the headwinds associated with declining market activity and significantly higher energy costs. After a period of strong residential building activity, detached housing starts were down 10% for the year, with a broad-based fall across all major states. In Western Australia, market conditions remained extremely difficult, and this had a significant impact on our operations and earnings. Gas prices of between 29 and 45% increases across the East Coast states on the 1st of January 2019 resulted in a $12 million increase in costs compared to the prior year, and that was primarily within Austral Bricks. I'll now do a brief overview of each of our major divisions within the Building Products Australia, starting with Austral Bricks. Austral Bricks is Australia's largest brick business, with leading positions in all major states and supplying into New Zealand and other export markets in Asia. Total sales revenue was $428 million in financial year 2019. Brickworks is committed to investing in manufacturing facilities to achieve the lowest cost position in each market. Following significant investments in Victoria, West Australia and Queensland in recent years, The focus for capital investment has now turned to New South Wales. A review of the future operational footprint within the Horsley Park precinct has been completed with a development application for a new face brick plant at the current Horsley Park Plant 2 site. That was submitted in the second half. Investment is supported by continued strong demand for bricks. Surveys of builders across the country, as completed by BIS Oxford Economics, show that bricks remain by far the most popular building material for external walls in housing across Australia. Looking also at high-rise and commercial construction, Austral Bricks has had great success in recent years benefiting from the growth of this segment. We've made significant investments to increase the penetration of bricks into this market, including the rollout of capital city design studios across the country, product development, and a focus on building improved relationships with architects and engineers. At the recent Horbury Hunt Awards, which recognises excellence in the use of building products in architectural design, our products featured in 4 winning projects. 2 winning projects are shown on the screen. On the left is the Arc by Crown building in Sydney, the joint winner in the commercial category. This project, inspired by the heritage buildings in the area, incorporates 300,000 dry press bricks of Hereford bronze from our Bowral plant. On the right is the Rail Operations Centre by Smart Design Studio, the other joint winner in the commercial category. This project featured 200,000 capital red bricks, also from our Bowral plant. Over the past decade, Austral Masonry has grown rapidly through acquisition and is now established as Australia's second largest masonry manufacturer. It offers a full range of masonry products and provides Brickworks with increased exposure to the multi-residential and non-residential markets. Masonry also provides geographic diversification, with the North Queensland market being particularly attractive due to masonry's superior performance in cyclone conditions. Total sales revenue was $110 million in financial year 2019. In May, Austral Masonry completed the acquisition of Aussie Concrete Products, a leading concrete sleeper retaining wall manufacturer based in Brisbane. This acquisition provides immediate market leadership in a fast-growing product category and the opportunity to expand sales through Austral Masonry's nationwide distribution network. Many of you might not realise, but hardwood sleepers have basically been banned in a lot of the states, and so the only way you can put a reasonably small retaining wall up is with this product. So we've got great hopes for this going forward. In New South Wales, earthworks are underway ahead of the construction of a highly advanced masonry plant to be located on the Property Trust land at Oakdale East. This plant is scheduled for commissioning in late 2020. Bristol Roofing is Australia's second largest manufacturer and installer of roof tiles, with concrete roof tile plants in Melbourne and Brisbane, and a premium imported terracotta tiles distributed across the country. Bristol Roofing's products also include solar tiles, metal roofing, and fascia and guttering. Total sales revenue was $131 million in the financial year 2019. This includes sales from the Fishwick Roof Batten Tile Mill, operated as the newly branded Capital Battens, and that follows the sale of the Auswest Timbers hardwood assets. Austral Precast has manufacturing plants in Sydney, Brisbane and Perth, offering standard and bespoke walling and flooring panels. This includes Australia's most advanced precast facility at Wetherill Park here in Sydney. Sales revenue was $77 million in the financial year 2019. Austral Precast continues to focus on a range of product development initiatives. In August 2019, Double Wall was launched. There's actually a sample of it over in the corner there if any of you'd like to have a look. It's a cost-effective, permanent structural formwork that offers significant advantages over alternate systems. We've also made a significant investment in Southern Cross Cement. We're a joint venture partner there, and we hold 33% interest in that company. The cement import terminal located in Brisbane will have shareholder volume throughput in excess of 200,000 tonnes per annum. The terminal is currently being commissioned, with the first shipment of cement being unloaded in October. The facility will provide a reliable, cost-effective source of cement for our Austral Masonry, Bristol Roofing businesses, and is expected to deliver solid returns on the invested capital. Turning now to our newly established Building Products North American division. As the Chairman mentioned, with 3 acquisitions over the past 12 months, we've quickly established a business of significant scale in North America, able to make a meaningful contribution to the group's earnings, and it is also a wonderful platform for growth. Early this month, we announced the acquisition of Redland Brick assets. This followed the purchase of the Iowa-based brickmaker Sioux City Brick in August and the purchase of Glengarry in November last year, coming up just right to a year this week. Once the acquisition of Redland Brick assets are completed, which is expected to occur in February 2020, Building Products North America will have market share leadership in key states across the Northeast, Midwest and Mid-Atlantic regions, a portfolio of well-recognised premium brands, more than 1,000 employees, 12 operating brick plants and 1 manufactured stone plant, circa 400 million brick sales per annum, circa Australian $290 million sales revenue per annum, and an extensive reseller network and company-operated retail outlets. Most importantly, a highly skilled and motivated workforce. These acquisitions followed a thorough strategic review which identified the North American brick industry as a highly attractive long-term growth opportunity for Brickworks, with a forecast for steady growth in construction activity, supportive policy settings for business, low costs including abundant and cheap energy, a strong heritage of brick construction. In addition, due to the fragmented nature of the North American brick market, there is an opportunity to participate in the ongoing industry rationalisation that is underway. Increasing plant utilisation, improving production efficiency, it is important to note that our brick operations are differentiated compared to other major brick companies in the United States. Our focus on the Northeast, Mid-Atlantic and Midwest regions, an area where other major players have minimal presence. Our product mix reflects the traditional building styles of this region, with higher margin architectural products into the non-residential and multi-residential segments making up 65% of our sales. This compares to the wider US industry where the sales into these sectors make up only 27%. Financial performance since the acquisition of Glengarry in November 2018 has been ahead of expectations. Sales revenue for the initial 8 months was $121 million and the EBITDA was $12 million. Following the harsh winter conditions from December to February, when the plants were shut down and EBITDA was break even, earnings momentum was strong in the final 5 months of the financial year. The integration of Sioux City Brick is now largely complete, including the planned closure of the Redfield plant, with volume transferred to the nearby Adel plant, allowing significant manufacturing efficiencies to be achieved. The next priority for the business will be the effective integration of the Redland operations and delivering already identified cost reduction initiatives. Longer term, we believe significant additional upside will be generated through optimisation of distribution channels, introducing new products, and applying our unique marketing strategy focused on style and premium product positioning. Significant progress has been made on key strategic initiatives. In July, an exclusive supply agreement was executed with Italian manufacturer Sanselmo for the supply of premium imported products into the United States. Sanselmo products will complement other imported ranges introduced since the acquisition, including La Paloma and ultra-premium glass bricks. A new design studio was under construction in central Philadelphia with a 10-year lease executed. This studio will open early next calendar year. Renovations have been completed at the existing New York showroom shown on the screen. As mentioned, our North American business has a significant portion of sales into non-residential application in projects such as schools, offices, hospitals and sports stadiums. 2 recently completed examples are shown on the screen. The Wegmans Hall building at the University of Rochester in New York and the new College House building at the University of Pennsylvania. Turning now to the first quarter update and outlook. Brickworks is in a strong position with conservative debt levels and a diversified portfolio of attractive assets that provide stability of earnings and consistent dividends and asset growth. The outlook across the division varies. Investments in Washington H. Soul Pattinson is expected to deliver a stable and growing stream of earnings and dividends over the long term. Another strong year is expected for property. In addition, the sale of 10 hectares of Oakdale East into the Property Trust and the completion of trust developments, it is also possible that further revaluation profits will be recognised during the year based on continued capitalisation rate compressions for prime industrial property across the industry. Within Building Products Australia, the first half of the current financial year is expected to be the low point for earnings, with high energy costs and difficult market conditions in Western Australia exacerbating the slowdown on the East Coast. In response to these market conditions, we have taken the opportunity to undertake maintenance and capital upgrades at many facilities as we prepare for increased demand in the coming years. These temporary plant shutdowns will have a further impact on the first half earnings. The transition to a wholesale gas supply to take effect from January 2020 will deliver significant cost savings for the business. We're anticipating a cost reduction of around $8 to $10 million on an annualised basis once the new arrangements are in place. Although first quarter sales and earnings are down on the prior year, order intake has progressively strengthened during the period and builders are reporting increased home sales. Performance in North America is expected to continue in line with the acquisition forecasts. These acquisitions have come at an opportune time and will provide a new and significant earnings contribution as the building industry in Australia moves through the current downturn. Once the Redland Brick acquisition is completed, we will have more than 2,500 staff. Our people are the key to our success. I'm very proud that at Brickworks we have been able to maintain a stable and highly experienced workforce, and I believe this gives us a competitive edge. I'd like to introduce a number of our executive staff who are here today. Ms. Megan Cublins, Executive General Manager at Land and Development. And Megan's done an absolute astounding job in the last few years, so she deserves really a clap, I think. Mr. David Fitzharris, Group General Manager of Austral Bricks. Mr. Andrew Neros, Group General Manager, Concrete Products. Mr. Greg Silvestri is General Manager, Austral Bricks, New South Wales. And Greg was previously the President of Glengarry in the United States. Mr. Mark Callagher, General Manager of Corporate Development. Mr. Brett Ward, General Manager of Marketing. Ms. Melissa Perot, Group Manager Energy. Because Melissa is responsible for getting that wonderful energy contract we're about to walk into. Mr. Wally Klukovic, Group Corporate Affairs and Industrial Relations Manager. Mr. Mihail Korpal, Group Finance Manager. Mr. Daniel Coots, GM of Austral Precast. Mr. Rob Listro, Chief Engineer. Ms. Emily Antonio, Strategic Operations and Environment Manager. Mr. Philippe, I'll try and get this right, Shoya, Group Reporting Manager. Sorry, Philippe. Ms. Lisa Eberger, Senior Executive Assistant. I think she's over this side. In addition, we have several other staff members, both here today and away, who have made outstanding contributions to Brickworks over the last year, and I'd like to recognise them and thank them for those efforts. I'd also like to take this opportunity to thank the Board of Directors for their guidance and support during the year, and I'd also like to welcome the two new directors. Finally, I'd like to thank all of you, our shareholders, including those in attendance here today, for your continued support of Brickworks Limited. I'll now hand back to the Chairman. Thank you.
I know there's a lot of information there, so when you get home that presentation will be on our website, and then also anyone accessible to the ASX has been released to the market this morning. Before we start questions, I have received one question, and it's a question I ask myself a lot. Why must the company pander to the very small vocal group of climate change believers? They must only hold very small holdings. Yes, we should be good corporate citizens, but not waste a lot of money on these nutters. As I said, it's a question I ask myself a lot. Well, I think I've covered that on slide 10 when I spoke about the sustainability of the company. So Lindsay's here with me, so does anyone have any questions? We have a couple of gentlemen with microphones. So will you please show me your card, state your name, and we'll take your questions.
My name is Dennis White. There's my card. I've got two questions. Perhaps I ask the short one first and then perhaps the longer one later on if there's time. Could you just explain to me how the ratio of dividends per share to underlying earnings per share, how the ratio has changed so much over the last 5 years? It was 90% back in 2015. It's down to about 35% now. And I guess it's a retained earnings thing. Is that how it's working? But I'm not sure why we're paying out such a little amount.
I think there's a couple of reasons there. First of all, the earnings have increased, and we keep an eye on the, we've got to keep an eye on the volatility of our earnings. If we get too far in front of ourselves, we might have to pull the dividends back. So that's one concern. But the other thing is we tend to look a little bit more at the underlying cash earnings as against the headline, because a lot of those headline earnings don't necessarily come through in the form of cash. So we just got to look at where we handle it there. But we have, of course, increased the dividend 3 cents every year for many, many years, and the last time the dividends went back was in 1975. So I think it's a pretty good track record.
Look, I love that. I mean, as a shareholder, I think that's fantastic. Low debt and those sort of things. But are we retaining more of our cash? Is that what we're doing as the years pass?
Going into business.
No, I don't think, not really. I mean, it's generally about 50%. That's not like a policy, but it's generally around the 50%. Now, clearly, that percentage goes up or down. If you're in a really tough time, as we were coming out of the last downturn, of course, we were paying out a very high percentage. And as our earnings have picked up, that percentage has come back. And we have got a quite significant growth program on, so we've got to be careful we don't pay it too much.
Will I ask my second question if someone else? Maybe not.
Yeah, go on, you've got the floor.
Look, I've been a long-term shareholder of Brickworks and very satisfied, great dividends, low debt, all those sort of things is fantastic. But a question I've asked myself many times over the years is, how do we do it? Because if you look at the underlying volatility of the components of the company, it's a bit scary. I mean, you look at Soul Pattinson, they're in coal mining and they're in telecoms and they're in funds management. They're all pretty volatile areas. And then the other part of the company, well, I guess the property trust is nice and stable, the property development's not. But we're in brickworks and in building supplies, which is notoriously volatile. So I've asked myself this question time and again over the years, and I've just put it aside because the results have been great and the dividends have been great, so I've shut up. But I thought I'd come along this year and ask this question that's been niggling at me. How do we become such a stable, conservative, dividend growth company with such volatile underlying businesses?
People. We're very fortunate to have good people, and I think most of you here have worked in business, and without good people, you're buggered. So I think we're very fortunate here to have an exceptional team, which Lindsay has built up, and also credit must go to Alan Bentley, who was his predecessor. And I would say, without a doubt, we have probably the best people in the building business in our particular areas in Australia. We're not a fat, bloated company like CSR and Boral. We're nimble, we can move very quickly, and I think we're seeing the results of that over a long period of time. And you see, as Lindsay quoted there, I forget what page it is on, both Soul Pattinson and Brickworks have more than outperformed the market. So if you've had your money in Soul Pats or Brickworks over a long period of time, you've done very well. And that figure I quoted back here, if you invested $1,000, Mark, can you put that up? If you invested $1,000 in 1968, you can go for a good holiday because it's now worth $463,000. So I think that probably speaks volume for the ability that Lindsay and his team have been able to grow this business. Thank you. Well, if there's no further questions, we'll push on with the meeting. Thanks, Lindsay. As usual, a very good presentation. I propose that the notice of meeting mailed to all registered members on Monday, the 21st of October, be taken as read. Does anyone have any objection to that? All right, thank you. Now, I'll just explain, we've all got these machines, so just let me explain to you. I haven't got one here that I can I just borrow that machine so I've got something I know what I'm talking about? If you are eligible to vote at this meeting, you will have been provided with a handset and a smart card at registration. If you believe you are eligible to vote but did not receive a device, can you please raise your hand and I'll get someone from Computershare to come and help you. All right, so we're ready to go. I will now go over the instructions on how to cast your vote. If at any time you have difficulty with your device or are unclear of what to do, there are Computershare staff around the room and they will be able to assist you. If you have not already done so, please insert your card into the slot at the top of the handset with the barcode at the bottom and facing towards you. When I open the poll, your handset will activate. At this point, please press either 1 to vote, 2 to vote against, or 3 if you wish to abstain. All right, we've all done that. You will then receive a confirmation on your handset that your vote has been cast. If you wish to change your vote, simply select a new option while the poll is open. Appointed proxies should vote in the same manner. Pressing 1, 2 or 3 will cast any open votes you have available. Voting instructions from the underlying holder will be cast automatically. At the close of the poll, votes from the handset will be added to the pre-meeting proxy votes and the result will be presented on the screen. Voting on all items of business for consideration at today's meeting will be determined by means of a poll. We have received proxies from shareholders representing approximately 119 million shares. This represents approximately 7% of shareholders, or just under 80% of the company's issued capital. We will display details of proxies received in respect of each resolution. I intend to vote all undirected proxies that I hold in favour of resolutions 2, 3, 4A, 4B and 4C and against resolution 5 if required. Everyone's ready with the machines? So no need to vote on it, but we'll move now to the first item. The Corporation Act requires that the annual financial report, the Directors' Report and the Auditors' Report be considered at the annual general meeting. There is no vote of shareholders on these reports, but you will be given to ask any questions. We also have, again, I mentioned before, Mark Conroy here from EY, if anyone has any questions on the accounts. Are there any questions on the financial report? All right, we'll move to item 2. Item 2 of the business is to consider the remuneration report for the company for the year. The report is contained on pages 73 to 89 of the 2019 Brickworks Limited annual report. In accordance with section 250R(3) of the Corporations Act, the vote on this resolution is advisory only and does not bind directors or the company. Resolution 2 to adopt the remuneration report for the financial year ended 31st of July. As I mentioned above, the complete 2019 remuneration report can be found in the annual report of the company, forming part of the Directors' Report. Does anyone have any questions on the REM report? All right. I refer members to the screen for the proxy details received for this motion. The directors unanimously recommend that shareholders vote in favour of Resolution 2. As chairman of the meeting, I intend to vote all undirected proxies I hold in favour of Resolution 2. A voting exclusion applies to this item of business as set out in the notice of meeting. I now open the poll on this item and put Resolution 2 to the vote. Please enter your vote. And I stress again, if you want to vote for, you've pressed 1. If you want to vote against, you press 2. And if you would wish to abstain, you press 3. Is it someone from Computershare? You just let me know when you think I should push on, sir. Thank you. Okay. I now declare voting closed in regards to Resolution 2. The results should appear on the screen, and I declare the motion passed. Item 3. Item 3 of business is to consider the grant of performance rights to the Managing Director under Brickworks Executive Rights Plan. Resolution 3, to approve the grant of performance rights to the Managing Director under the Brickworks Executive Rights Plan for the financial year ended 31st of July 2019. You will see in a few minutes the proxy position related to the approval of the grant of performance rights to your Managing Director. Further information regarding this resolution can be found in the explanatory notes of the notice of meeting. Does anyone have any questions on the performance rights for Lindsay? All right, again, I refer members to the screen for the proxy details received for this motion. The directors unanimously recommend that shareholders vote in favour of Resolution 3. As chairman of the meeting, I intend to vote all undirected proxies in favour. A voting exclusion applies to this item of business as set out in the notice of meeting. I now open the poll. And again, you see up on the board there what you can do. I now declare voting closed in regard to Resolution 3, and you can see the votes on the poll there. Item 4, Resolution 4A, is that Mr M Millner, who retires as Director in accordance with Section 6.3 brackets B of the company's constitution and being eligible for re-election, be reappointed as a Director. Does anyone have any questions on the Michael Millner's election as a Director? Okay. Again, I refer members to the screen for the proxy details received for this motion. The directors, with Mr Millner abstaining, supported the re-election and unanimously recommend that shareholders vote in favour of this resolution. As chairman of the meeting, I intend to vote all undirected proxies that I hold in favour. I now open the poll on this item to Resolution 4, and again you can enter your vote. All right. You see those? I can see them here. Yep. Okay. All right, thank you. I see that Michael Millner has been re-elected. Resolution 4B is that the Honourable Robert Webster, who retires as a Director in accordance with Section 6.3 brackets B of the company's constitution and being eligible for re-election, be reappointed as a Director. Does anyone have any questions of Mr Webster's reappointment? If not, again, I refer members to the screen for the proxy details received for this motion. The directors, with Mr Webster abstaining, support the re-election and unanimously recommend that shareholders vote in favour of this resolution. Again, as chairman, I intend to vote all undirected proxies in favour. I now open the poll. Thank you. I now declare voting closed with Resolution 4B, and as you can see on the screen, Mr Webster has been re-elected. Resolution 4C, that Mr M Bundy, who retires as Director in accordance with Section 6.3 brackets 1 of the company's constitution and being eligible for re-election, be appointed as a Director. And I think on page 11, I didn't say I think, on page 11 I read out Malcolm's credentials, so I don't tend to go through those again. Does anyone have any questions of Malcolm's election? All right. Again, I refer members to the screen. The directors, obviously with Mr Bundy abstaining, support the re-election and unanimously recommend that shareholders vote in favour of Resolution 4C. Again, as chairman of the meeting, I intend to vote all undirected proxies that I hold in favour of Resolution 4 bracket C. I now open the poll. backwards. All right, thank you. I now declare voting closed on resolution 4C. And you can see that Malcolm's been re-elected. So that concludes today's meeting. I thank you very much for your attendance, and hopefully we'll have some even better news for you next year. Thank you.